following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back with you. And we are honored this morning, I think, to have Joey Jong on with us. Joey, you there?
Hey, John. How you doing?
Hey, man. God, got a lot to talk about. How are you?
Good to be back. It's a typhoon, mega typhoon in Hong Kong right now.
Oh, that's right. Oh, my God.
Yeah.
I forgot about that.
And there's another one right after it. Yep.
You know, how many typhoons actually went across the Philippines? Wasn't it 14 last year total? Yeah. Something like that? It was crazy. Man. So is it there yet? Or is it? I haven't kept track of it, actually.
Well, yeah, I mean, it's flooded everywhere right now.
Wow.
And, there's school buses had to turn back. Some people got kind of caught in the flood. So.
Wow. That sounds like serious. Around here. You get crazy around here. Well, man, hope everything ends up okay over there with that. I think Larry spent some time over there too. I don't exactly know where he's at right now, but I'm sure he's keeping track of it. Yeah. Hey, got a big debate tonight. First of all, I know you got your popcorn, or actually you got breakfast waiting for that probably, but
it's dinner time.
Yeah, exactly. How do you think that's possibly going to affect the markets? I mean, do you think it's kind of like already baked in? Everybody's kind of happy, and not a lot of volatility is going to happen relative to the debate itself, or what are your thoughts on that one?
I think the presidential election is what everybody is focused on, and as we know, like, what everybody else is focused on is usually not what causes the actual volatility. So what's going to actually cause the volatility is what people aren't really focused on, which is kind of the congressional and the Senate, and all those elections are coming up at the same time. Nobody else is talking about those elections. And at the same time, nobody else is really starting to talk about Italy. I think there's a vote coming up in Italy. So with Brexit, and I mean, after you've seen what's happened to the sterling already, other countries are going to start voting. Now, which way Italy votes, and the elections there in the beginning of December are extremely important, and nobody's really focused on that yet.
What do you think's going to happen? I mean,
those are kind of things on the outside that people aren't focused on, but may really be the cause of the volatility.
Is Italy basically a toss-up right now as far as the numbers?
It's 50-50.
Right. So just like in Great Britain, I mean, they kind of had the thing slanted beforehand towards not exiting. But, the thing that I don't think they really factor in enough is, the people that want to separate are the people that definitely go to the voting booth. And it's almost like you got to give them another 5-6 points just based on, the attitude that, hey, I'm going to go vote and I want this to happen. And the other people are like, they're kind of ambivalent towards it. So I just like the British numbers beforehand when they were doing the polling, they really don't I don't know if they ask them, hey, what's the percentage that you're actually going to go vote, even though you feel this way? I mean,
yeah.
So So there's
So, yeah, so when it's that close, and you've got all these other variables, it is actually quite a serious vote. And I think that constitutional vote can really affect things, and then that can tip the the curve, tip the bar over to other votes in other countries in Europe later on, and then people call for referendums, and then you have
Right.
new votes coming up. So that's kind of the black swan stuff that can come up later on.
Right. And do you think that's? I'm going to pull up the euro really quick. And I know you and I are not opposed to this thing dropping, but is that kind of what's being kind of felt in the dollar euro cross right now? I've got the chart up. We're getting below daily profiles already, not even wanting to stay above, and then that 108 and some change, 109 neighborhoods down there. Do you think that's what are your feelings on where this thing's? I know where you ultimately think this thing's headed.
I think all the way up until end of November, early December, you're going to see pressure on the euro because of Italy, because of there's stronger and stronger chance that the U.S. raises rates. After that, I would actually start to take profits because and it may even come earlier than that, right? So I don't think people are going to necessarily take profits before the Italy vote. They might, but I would start taking profits afterwards, just because we have Grandma Yellen there, and she's awfully nice and bakes us cookies every time.
Yeah.
And so bakes us nice apple pies to make and gives us hot chocolate. So
and sedatives mixed in, and maybe
yes.
a little LSD too. So
John, yeah. So
I mean, it's like what she
might have her special brownies in there,
Yes, exactly, the special brownies. I like it. Well, I tell you what, let's move. We got about 45 seconds left before the first break. Let's move right into the end, because this thing's diving a little bit more. I mean, we had that close that you and I were just, I literally, this hasn't happened in, let me just go back here. July 2015 was the last time we had started trading above profiles on our weeklies. That happened last week. And now we're coming back and retesting that area, 103.50. We're just kind of piercing it a little bit here. Is this the buy here? Based
I definitely think it's a buy. I think that it's coming down. The yen is strengthening a little bit because there's an article about them pulling back on, or not further easing this time in November.
How can they not? Hey, listen, can you stay on?
Yeah, I'll stay on.
Great. Thanks. We'll be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We've got Joey Jong on with us from Hong Kong. And Joey, we were finishing up with the yen. That's, in my opinion, I'm with you. We're at a buy area, that powerful close above, then come back and retest neighborhood. I like it. I'm glad you like it. That makes me feel better.
Yeah, I think they've pulled. I mean, I don't know whether they're going to add more easing in the November meeting or not. It doesn't matter to me because overall, Japan is going to stay in a negative interest rate environment, and they will probably add to it later on, if not November, then December. So it's kind of a moot point that, I mean, either way, you're going to have the dollar interest rate differentials playing into this whole thing, and it's just natural for dollar yen to be going higher.
Right. So
and with the weekly close above the profiles, like you said, it's actually a very good opportunity to be buying on the retest, which is always what we like to do.
Yeah, and there's a lot of strategies that you and I talk about, employ, automated, the whole 9 yards, that really rely on that powerful setup. And if it gets stopped out, it gets stopped out. But you really kind of hope and dream for situations like this. We haven't broken above profiles on the yen like we had just talked about, Joey, since June, July, August, 2015. So this is a pretty big event. Had a little reversal a couple of weeks ago on that, or month or so on that. But you got to keep turning the wrench the same way. Somebody's asking about the Chinese currency versus the dollar, the yuan. I've got it up. Yeah, I've got it up right now. This is the long-term weekly. And what's your thoughts on this one? Because we've had another breakout last week, and we just continue to head higher. And we've really, just looking at the charts, been able to kind of buy breakouts, buy support on the long term for the most part. Where's this thing headed?
Okay. If you actually look at this Chinese yuan on a longer term basis, you on the daily chart, 1 year chart, if you look at it, this is going to go back to some people who really look at technical analysis, but you're going to see a giant cup and handle Now, have you
Okay.
looked at? Do you know about that, John?
A little bit.
From William O'Neill?
Yeah, no, I read, what was it, John, I forgot his name now. It escapes me.
Yeah,
It was like Technical Analysis of Futures Markets. That was like one of the first. It's like a
yeah.
book about 5 inches thick, and I read the whole
So
thing, and I read it about 5 times. So yeah, I'm
yeah,
aware
so
of
William
it.
O'Neill was one of the first technical analysis guys that I ever read and followed, and he one of his prime setups is the old cup and handle. And if you look at the daily chart on the CNH or CNY, whichever one you want to look at, RMB, you'll see that this is a cup and handle with kind of the handle breaking out right now, and that's one of the strongest kind of setups that you get.
Okay.
And so right now, I think what they are actually doing is that for the last year they've been pumping the economy full of liquidity and money, and they've basically been giving free rein for the banks to be lending out money. So credit has just skyrocketed in China, and the property market is up anywhere from 50 to 90% this year.
God, that just blows
This
my. You
year.
said that the other day. It still shakes
It's
me. When I hear that, it's unbelievable.
and 50 to 90% on top of something that had already gone up quite a bit before that. So and that's all credit driven. So if the credit gets reined back, and the economy gets shakier, then this thing might spike up to somewhere around 690 to 7. And I don't think they're going to allow it to go past 7. The
Okay.
government itself will just, I mean, that's kind of their target rate anyways. It's a very controlled currency. So, they're allowing it to depreciate right now. And anybody who thinks that it's undervalued, I don't think it's undervalued at all. And in fact, I think it deserves to be, it deserves to devalue a little bit because it's been overvalued for a while.
Right. Well,
because the economy has come back quite a bit.
Right, but considering that, I guess the growth rate's around 6.7%.
No, that's the published growth rate.
Okay. Let's get the inside scoop then. Go ahead.
So the published growth rate is 6.7%, but it's come down from a real growth rate of somewhere near 8% down to say 4% or so. Is what you hear kind of real economists talk about, is that it's come down to 4 to 5%, which for an economy to slow down that much from a high growth area, it's actually a very big impact still. So
right, but I mean, what's the normalizing rate that ultimately they think is?
Yeah, I mean, I don't know. It's too confusing to talk about the normalizing rate because you have an unofficial rate and an official rate.
Right.
So I think, look, at the end of the day, they've pumped the economy full of credit in order to stabilize it around this level, and I think they're at a point where they can't really pump in too much more, because you can't have the property prices go up too much more, from this point.
We kind of already explored that experiment, over here, and we know how it ends. So
exactly. So the thing is, over the last few years, the property market has actually been driven by very little consumer credit, meaning people bought with cash, okay, or at least most of it with cash, like over 50, 60, 70% with cash. Now, this year, almost all of the boom, all of the hike in prices has been driven by credit, personal credit.
Right. Wow.
So personal debt.
What's wild is,
Yeah.
What's wild is that always shocks me when I'm over there and I see. I mean, people go for it over there. I mean, there's no reservations sometimes when there's a trend happening. It's like people don't. I don't know how to explain it or coin it properly, but they just don't. It's like it gets maximized heavier over there when things like when there's a trend or some new thing. People just go for it like I've never seen before, and they don't.
Oh yeah.
You know, what I mean, like over here, okay, well, let's think ahead a little bit, but
No,
not over there, man. It's like, man, people see something happening,
gun home market, I'll tell you.
they're in. Can you hang out one more?
Yeah, I'll hang on for one more. Yeah.
Great. Thanks. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We've got Joseph Jung on with us this morning. And Joey, we were kind of talking last segment for people joining us now about the Chinese real estate situation and, how that's going to end ugly, as we both know. And I guess we could, if that ends really ugly, I guess the S&Ps could pull back like 1.4% off all-time highs or something. Yeah. Something crazy like that. Ooh, but where do you think? What are your thoughts on how that will affect our markets and how is what's the worry factor right now about that situation?
I put a pretty low percentage on it because I think even
Okay.
if they pull back on the credit, it's not going to be that quick and severe. So they're going to be pretty careful about it because they're very aware that the economy is pretty brittle, and the way to stimulate it was not through the stock market but through the property market, which they've done very well. So in China, they do much more precision type of financial support by the government instead of basically using as they do in the U.S. They use the Fed and interest rates as a macro stimulator, and so it's supposed to move everything, right? But for China, when they do things, they do very specific stimulus. So if the stock market is really, really crumbling, then they'll come in with a very specific stock market stimulus. If they want the property market to go, then they will direct the banks to start lending property loans. So it's a very, very specific thing that they do, and it works. I mean, it's definitely worked this year so far. Now, whether or not they can control it and give a soft landing, I think that they're going to try to engineer it. I don't know how successful they'll be, but I think they'll be okay. I don't put too much of a chance on a calamity coming.
You don't think it'll be like the Shanghai parabolic up, parabolic down?
No,
type?
No, not really, because they're very much more careful about the property market than they are about the stock market. The stock market, they don't really know how to control. The property market, they're actually much better at controlling.
Okay.
Yeah.
All right.
So
Well,
and plus even the currency, it's at 6.74 right now. I don't think it'll go much higher than 6.9 ish.
Okay.
And I don't think it'll even touch 7. They'll come in before it touches 7 and control things. I think that's about as much as they wanted to devalue it.
We'll keep that in consideration and take a look at the technicals on it too. When that gets into that area.
Yeah, and every time it gets to, every time it starts moving, people really start to jump on the fact that China's controlling their currency, etc. I mean, the Chinese currency is less volatile, and I would say I don't know, this is gonna draw some attention, but I would say it's less controlled than say some of the other currencies when they're Japan is negative interest rates. That is really controlling your interest, your currency. So is Germany. I mean, Germany is the biggest culprit of negative interest rates and keeping
currency strong, relatively
down.
strong. Yeah.
Well, they're keeping the euro down. Actually, they want to keep the euro down as much as possible so they can export the heck out of everything in Germany, right? So, and now the British pound. They're talking about Carney easing on the next thing, even though inflation is going up, because he wants a weaker pound. So, so all of this stuff is being manipulated in one way or another. It's just, and people can interpret it one way or another. But I think the Chinese renminbi is probably one of the, least volatile, least. It is a controlled currency, but look at the moves. It's a very slight move compared to the British pound, compared to the euro, compared to, the other currencies.
No doubt. Well, that being said, the dollar, we talked about that ultimately climbing up into that 99, 100 area. I still feel good about that.
It is going to be like, I guess, end of the year to first quarter thing that it gets there, and then maybe it pulls back from there. There's not enough reason for it to kind of go ballistic unless we really start to see some unraveling and some sovereignty votes or those types of votes in Europe and maybe even China. unraveling a little in China as well. So if we start seeing that in the first half of next year, then the dollar is going to zoom up to 110 or whatever it might be.
Whoa. I'm not going to complain about that, actually.
No, I won't complain about that. So.
Okay, so new profile today on the dollar, guys, on the daily. Big numbers, support down below 97.28. Top of the profile 98.15. Those are all in the scanner, those numbers, along with all the other things we're talking about and looking at. Joey, can we hit gold just a little bit, because this thing's bounced a little bit, and I'm showing it in the den right now. We never got a close below 12.52, which is, kind of the new stake in the ground on the downside. And we talked about 12.52 and 12.78.5 last time. We're at 12.72 right now. Is 12.78.5 a selling point for gold, or do you think the kind of currency situation going on? And what are your thoughts there? I think this is still a sell at 12.78, or?
Yeah, I still think it is a sell. I think the dollar is just gonna kind of, it's just gonna bounce around over here. It's gonna bounce around over here, and then, so I don't think the dollar's gonna really pull back that much. So 97.20-ish is a good support. So if that's the case, then 12.70, 12.80 is actually some pretty strong resistance there.
Right. On a relative sense, the default evaluating factor of gold relative to the dollar pulling back a little bit to that support area, 12.78.5 is kind of that relativity move up in gold, and the dollar possibly coming down to support. So, I'm in agreement there.
I mean, we could, if we break through that, we could even spike up to 12.90. But 12.90 is the moving average up there, and but if it gets up there, I would really consider selling that, into that strength, because I don't think the dollar move is necessarily over yet. I think we're just we've made some good gains in the dollar in the last few weeks, and now we need to kind of come back and rest a little bit.
Okay, Joey, thanks for joining us today. I know you're busy. Appreciate the time, and
take care, John. Take care, guys.
Okay, thanks, Joey. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show, and it was awesome to have Joey on earlier. Here's November oil. Still haven't gotten that daily close back below the 50 area, hovering above those weekly infra highs. 51.22 was that area we talked about as a little bit of resistance on a little bit of a scarier trade about 4 days ago. We're back into that area. Don't like to see this. Just kind of passing on this one. I actually thought we might get a close or two below 50 again and be able to kind of use that as a lever, but don't like to see this going back into 51.22, so I'm not looking to use that as a place to sell oil right now, just kind of passing on it. Again, the big numbers on gold, 1278.5. Never got the weekly or daily close below 1252. Let's take a look at November beans really quick. And the reason I'm pulling this up is we got into that 83 we talked about was another area to kind of sell, reached a high of 87, and we've come off kind of reverse yesterday and came off. That's kind of good news for the shorts. So the big numbers, 964.5, 983. A couple of stocks in the news here. Got quite a few stocks that had earnings or news yesterday. Goldman Sachs was up. Let's just take a look at that one. A highly trusted organization. I hate these people. 170.71. So let's just see where we're at. Got some prints going this morning at 173 approximately. So again, you know, a banking stock trading above profiles on the weekly. Had been kind of a stronger bank. I mean, as you can see, kind of reversed here. So that was not on our short list anyway. But let's take a look at what has been on our short list, Wells Fargo. So here's the weekly. We got that inflection point low. So we had the, you know, new profile attempting to appear, closed on that yellow kind of peel back in the scanner last week. And I'll give you an example of that. There's one right there on Alcoa. That's what that means, new profile attempting to appear. So it locked in. Here's the weekly numbers, 44.29. That was, again, the line in the sand this week on WFC. Bottom of the profile, have to be willing to take some profits off when you get to that area. And that's kind of what this means, and that's what that means in a downtrend. So now what do you do with this thing? I like this. I like selling at 45.31, and I like it revisiting that weekly unfair low, blocking out the long side on this stock still. And why not? That's just so sad. The guy had to forfeit the 41 million stump. I don't know if I'm saying that right. Had to forfeit the 41 million in bonuses or whatever the heck he was going to make. That's just a sad situation. I hate to hear that somebody is going to have to not make $41 million that ran a criminal organization, but that's a different show. Here we go. Unfair highs on JP Morgan 67.77. You don't want to be selling this stock. This is something you want to, again, stay away from on the sell side. Sell the weak, buy the strong. And I'm entering the Dollar Shave Club. Just want to announce that. Let's take a look at another stock that we've been keeping our eye on the short side. Johnson & Johnson. This is one we talked about, the cracks in the armor, the selling of the resistance. 120.75 had that earnings situation yesterday. 118.18, talked about selling that recently. Earnings kind of helped this situation, didn't have to. But again, this has been on the scanner and been on our radar screen. Here's the daily. Don't want to try to pick this up on sale yet. My personal feelings on the broad stock market is we are going to have some kind of big downside move coming up. And I'm not just saying that. That's quite a few reasons in the background that that's the case, in my opinion. Let's take a look at a couple other stocks that had some earnings, or actually some ones that are coming up. Let's take a look at AXP. I think this is after the bell today. If I can get the right stock symbol up there. Another financial stock. All right, so pre-market looks like 60.5 printing right now, so bouncing a little bit this morning. Here's the, again, crossing below the profiles, go back and retest. This is that situation in an inverse type manner that Joey and I were talking about, the yen trade. Got the close above on the yen, go back and retest. We're at that 130.5 or 130. What's the number? Let me just pull this up so we can see it. 130.5, kind of the same similar technical situation inversely for AXP the other week. And then we've got some earnings coming out today, not the darling of the financial world. So again, if you want to roll the dice, I'd be a little bit more leaning towards the short side, but anything can happen on earnings. eBay, some news today after the close. Again, this, you don't want to mess with this one. This is a crapshoot. Mattel, was that Hot Wheels? Matchbox? Hot Wheels? Can't remember. Used to play with those things in the dirt when I was young. 31.06, unfair lows on the weekly. Looks like we're trading up a little bit this morning, 30.96. So kind of getting into that weekly unfair low. But again, earnings, that's kind of up to you how you want to, what your risk tolerance is. A couple of things that happened yesterday. Just want to hit a couple more here. Philip Morris, Richmond, Virginia, or up that way anyway. Here we go. Again, something's wrong here. It's 97.63. Trading up a little bit this morning. Here's the dailies. So that weekly number, 97.63, is going to be the area to lean against on the Philip Morris trade. Let's take a look at Baba. These guys are coming out with, or I guess, going to release Alipay, and this is another one. It's kind of like the Amazon, Facebook situation. Just block out the short side. Here's the latest buy point on this one, 99.25. As you can see, kind of letting the market come to you. Kind of a no trade right now. So 108.20 and 99.25 are the big numbers on Baba. I think in between there, you're just kind of swimming around. And a couple other stocks here. Well, we got 10 seconds. How about that? Didn't see the clock. All right, S&Ps, guys, we didn't really talk about this one. Still short-minded, trying to lean against this 2134 area. We're moving up a little bit this morning. Breadth is still negative on overall profile aggregate breadth in the long term for the S&Ps. Thanks for joining us. Stay tuned for Larry and all the other hosts on TFNN.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. I was looking forward to Larry's show so much that I was like ended my show early. So sorry about that. We got a couple minutes left. Let's hit the 10-year and talked about these numbers. And again, just wanted to, the premise of, these balanced areas, it allows me to just look at, and, this is what Joey again, sold a very big operation in Hong Kong. A lot of institutional traders look at this information on the Bloomberg terminal, but I use it to pick battles. I mean, I use it to kind of, again, put lines in the sand to where I can play defense. And the 10-year, just a good example, again, 129.22. It doesn't always work out. That's what stops are for. But, talked about some areas up top, 130.14. I think we reached a high right at that 130.13. So, again, here's the 10-year. I don't think we've got a chance to really move big here, but that was the range, so to speak, and it explored it pretty much completely. And we talked about my slant on the S&Ps is a little bit south here. We talked about gold, silver. We're just going to hit it really quick. long-term on silver is still in the balanced area, but here's this 1778 area. New profile today. We're kind of right there. Gold's kind of getting into that 1278 area. So a lot of, these two instruments may come off a little bit here. We've hit it this morning already. As you can see, these are all profiles in the scanner. You don't really need charts to get this information. Okay. We're going to hit a couple more stocks that were in the news here. Let's take a look at ExxonMobil. If we can pull it up. There we go. And come on, load, guys. Here we go. ExxonMobil not, exactly acting well in the latest move up in oil. That's kind of also putting, some of these XLE stocks are not exactly cooperating. So I'm still a big fan of that crude situation. 51.22 is a scarier short trade up there. You're above profiles on the weekly. I'd rather see this thing get below 50. And again, ExxonMobil not really in a situation where you can play around with it yet until you get into 87.81 or 85.60. Those are the kind of shorter term numbers. I think long term on ExxonMobil is got a revisit of 85 and lower in order here. And man, they are putting up solar farm after solar. They're actually around here. They're having to restrict and just say, hey, no more of these things. Putting up some ordinances in place to where people cannot lease their land to these solar companies. There's a massive amount of solar activity happening around here. It's amazing. I don't know why people stop farming, but I can understand that. Here we go. Home Depot. This is one we've been following on the short side. Reason being this big profile appearing above price action. 125.74 looks like pre-market, and we're sitting below profiles on the daily. Still think this thing could take another dump here. Stops above 126.46 on Home Depot. Kind of watching that one personally. Now we're going to end the show for real this time. Stay tuned for Larry, guys. You'll thoroughly enjoy it. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.